Wonderful people. Very excited to have you all. We are going to ask our chairman, Peter Oslander, to perhaps, who's both chairman and also partner of Sherpa, to do a couple of opening words, a word of welcome before I ask Lisa and Priscilla to help us with the content slides. Peter, do you have access to your microphone?
Yeah, I think so. If you unmute me, I believe this works. Thank you, Hedda, for the introduction, and I'm very happy to give a few introductory words on this webinar and on the survey itself, basically. I realize that we, I think, as an organization, realize that the survey is a huge burden on the ones who participate, members and non-members, the ones that help providing the data that enable EVPA to create this survey. And it's a huge burden on the Knowledge Center as well, the EVPA Knowledge Center. But I think it's, we feel it's a very worthwhile exercise. We started it about 4 years ago because we want to see, we want to get independent statistics on the industry. And it's true, the EVPA survey is not the only data gathering exercise that's being done, but there are a number of them that some of them get carried away in enthusiasm about the sector, and it is not always clear how independent data are. So it's important that there is a body, that's how we feel, a body that gives independent data on the sector, size and trends that will alert practitioners on the directions that the sector is taking, or the EVPA as an organization on trends on where to put emphasis and where not. The survey is also very helpful, and that was certainly the first one, but also the consecutive ones, to raise awareness on VP as a practice, as an industry, and that's helping a lot in spreading the word, making people aware of the possibilities. And then, last but not least, the survey is also a reason for sometimes, depending on the outcomes, for further research. Sometimes we see trends or outcomes that give rise to thought and to further research to find out what's going on, what's behind a specific change in numbers. If you compare year on year, because that is one of the values. If we do this regularly, we can see movements in numbers, yeah, which obviously give trends, but also give reason for further thought. So it's I think it's a very good initiative to spread the knowledge that is collected more and more, not only through printed matter and digitally, but also by a meeting like this on the web for those who are interested to learn more about the contents. So I hope you have an enjoyable webinar this morning, and I'll hand over to Hedda again to moderate this. Hedda.
Thank you, Peter. Thank you. And for those of you who might have joined just in the speech, that was our chairman, Peter Oslander, who gave a little bit of the background of the survey and the why. And we're gonna dig in a little bit deeper. I think Peter gave us some things to think about in terms of the drivers for setting up this call. But we got to get into the nitty-gritty to really create some so what's. And in that vein, I'm going to turn to Lisa. which is the right place to start. Our head of research and policy director at EVPA and running our knowledge center. Lisa, would you like to add a couple of more comments about the survey itself before we dig in?
Yes, thank you very much, Hedda, and thank you for this introduction from Peter as well. I mean, I'm very excited to have this webinar because, as Peter and Hedda explained, this is the fourth year that we've done the Venture Philanthropy and Social Investment Survey, and I would say that when we started, we had very little to go on. We didn't know what kind of questions to ask. You know, what should be the boundaries of the sector. We're still struggling with these questions, but I do think that we have come to a very good sample, and we see that the population is growing, which is also a sign that the sector itself is growing. We have identified certain trends, and we would like to encourage all to read the survey report, of course, but we decided to focus this webinar on the questions that we found especially interesting, where there's a certain room for debate as well. And I think that also looking at the last comment that Peter made in terms of inspiring future research, this is really also what we're trying to do. So we're encouraging others as well to reach out to us and ask if they can use the data so that you can do further research. And I will now hand over to Priscilla, who will explain the content and the details of this year's survey. And I will then come back if you have questions on the survey at the very end.
Okay, thank you, Lisa. So, good morning, everyone. My name is Priscilla Boiardi, and I'm EVPA's research manager. Today, I would like to give you a bit of an overview of first the survey scope and methodology, and then some of the key trends that, as Lisa said, were identified this year. So first of all, as Lisa said, and as also Peter mentioned, this is the fourth year we conduct the annual survey of the venture philanthropy and social investment industry. And our survey aims to capture the activities of venture philanthropy organizations that are based in Europe, but that invest anywhere around the world. This year we have 95 leading venture philanthropy and social investment organizations that reply to our survey, which are located across 18 countries in Europe. And these organizations can be both members and non-members. As you can see, we had 72 members completing the survey, with an 81% response rate from our members. So we think that this is a very good result, and this is very representative data. In terms of the key trends in the venture philanthropy and social investment sector, first of all, this year, in terms of the resources that venture philanthropy organizations received, if we look at the distribution of total funding, we see that once again individual donors, corporations and external foundations were the main sources of funding for venture philanthropy. So individuals represented 19% of the total funds allocated to venture philanthropy organizations, with an increase of 14 percentage points compared to last year. Second is corporations, which represent 17% of the total funding made available for VPOs, followed by external foundations and governments. Interestingly, this year, institutional investors provided 9% of the total funding, becoming a key source of funding for venture philanthropy organizations, with an increase of 7 percentage points compared to last year. So in terms of the resources allocated through the venture philanthropy and social investment, we see that there is a continued growth in the sector. So the results of this year show that since the inception of the venture philanthropy movement, which can be placed roughly around 10 years ago, there have been over 5 billion euros invested. And the average support, financial support per VPO, has been increasing steadily in the last 3 years and has reached 8 million on average per VPO, which is a 28% increase compared to last year. At the same time, we see that also budgets for venture philanthropy and social investments are increasing. So when we talk about budgets, we talk about the total allocation of investments, which includes also the override costs. So as you can see from this slide, the category of budgets between 2.5 million, between 5 million and 10 million has increased by 10 percentage points. And also the category of budgets between 10 and 15 million has increased from 6 to 11%. This, of course, this trend is coupled with a decrease in the percentage of organizations that have budgets below 2.5 million. This is a very positive trend. However, of course, as you can see, the majority of venture philanthropy organizations still have budgets that are below 2.5 million euros. In terms of human resources, we see a continuous professionalization of the resources that are allocated by venture philanthropy organizations. So as you can see from these slides, on average, each VPO employs 14 employees. And in 2013, each VPO had on average 20 pro bono contributors, so specialized individuals who provide support to the investees for free. At the same time, we see that the unpaid volunteers decreased on average compared to last year. So in 2013, VPOs had on average 6 unpaid volunteers and 20 pro bono contributors. So this shows that the sector is constantly more and more professionalizing. So in terms of return expectations, we see that societal returns is the primary objectives of venture philanthropy organizations, with 75% of VPOs considering social returns a priority compared to financial return. However, in terms of return expectations, we see an increase by about 11 percentage points in the share of VPOs that expect capital repayment. This is coupled with a decrease in the share of venture philanthropy organizations that expect a negative return. So these two trends combined show that recycling capital is increasingly important for venture philanthropy organizations. So if we look more in detail at which organizations are supported with the venture philanthropy approach, we see that European VPOs are still investing across a broad spectrum of organizational types that go from non-profit organizations with no trading activities to non-profit with trading activities, impact-first social enterprises, and profit maximizing enterprises with a social impact. So this year, interestingly, the share of organizations, non-profit organizations with no trading activities financed has increased, reaching 35% of the total. So at the same time, the impact for social enterprises has decreased from 35 to 32%. This trend might seem a bit counterintuitive, but actually it simply shows that venture philanthropy organizations invest more and more to help non-profit organizations develop trading activities. So the venture philanthropy approach can actually turn organizations around thanks to the high engagement and turn them from organizations that have absolutely no trading activity towards more self-sustaining enterprises. So if we look at where how actually the money is spent, so where the money is allocated, we see that about 50% of the funding is allocated to cover override costs, both in an unrestricted ways with predefined payments and in an unrestricted ways with payments linked to milestones. So this year we see that the VPOs are showing increasing engagement in the activities of the investees actually, because the amount of resources that have been invested in specific areas has increased from 7% to 17% is the fourth category you see on this slide. And at the same time, also the amount invested and linked to milestones has remained stable, so 40%, while the hands-off approach of just covering overhead costs with predefined payments without linking them to milestones, the funding allocated through this approach has decreased from 24% to 9%. So we believe that this really points to the fact that venture philanthropy organizations are highly engaged. Another interesting trend can be seen by looking at the geographical scope of venture philanthropy investment. So as you can see, 56% of the total funding is invested by VPOs inside their own domestic markets. And if we look at the amount invested internationally, we see that 11% is directed towards African countries, which still remain quite important as recipients. And 9% is what we call Western Europe cross-border. So it's basically venture philanthropy organizations investing in Europe, but not in their own market, but in one of the bordering countries or other European countries. So for the first time this year, this percentage has become so big, and we think it's a very interesting trend, especially if we think that it's coupled with a decrease in the importance of African countries. So now representing 11%, and before representing about 26% of the total spend. When we look at the practices of venture philanthropy, we see two interesting trends. The first one is about social impact measurement, as you can see on this slide, and then the second one would be about the non-financial support. So in terms of social impact measurement, we see this year that about 96% of the respondents measure their social impact. And they do so by implementing the 5 steps impact measurement process that has been proposed by EVPA. Additionally, we see that social performance of the investee conditions the unlocking of new funding. So about 50% of VPOs almost always link providing new funding to the fact that the investee has achieved the goals, so has reached the milestones that were set for them, which is very interesting. It means that we're going more and more towards the measurement of social impact. As I was saying, the other interesting trend is related to non-financial support. So as we all know, non-financial support is crucial. It's an integral part of the highly engaged approach of venture philanthropy and social investment. And it's provided by VPOs in different ways. So as we can see from this slide, the most common way of providing non-financial support is by giving strategy consulting, which is provided by about 81% of VPOs, followed by coaching and mentoring of the CEO and the management team, the access to networks, financial management, fundraising, and governance. So as you can see, the majority of venture philanthropy organizations provide this type of non-financial support. However, apparently it is still very difficult to quantify both the cost that is incurred by the VPO and the value that is perceived by the SPO of this non-financial support. On the graph on the left, you can see that 33% of VPOs never measure the cost of non-financial support, and only 11% always measure it. In terms of value, 78% of VPOs do not measure the perception of non-financial support by the investee. And we think that doing that would be very important, and this is proven by the fact that the 22% that measures the perceived value report that 74% of the investee consider non-financial support to be at least as important as financial support. So on this slide, I just wanted to summarize the main highlights and conclusions that we could draw from the survey and the most important trends. So I will just now hand over to Hedda, who will be moderating the debates around these different highlights. And I would just ask you, if you have any questions, to please write them, and we will try to answer all of them. Thank you.
Thank you, Priscilla. And Lisa, that was an important backdrop and review of the content. And again, I think many of you have already, or most of you, no, everybody has received these slides. They should be somewhere in your mailbox. If you want to go back through them, if you can search through them. And I'm actually asking the organizers over a chat right now to figure out which day and time you did receive them. So if you want to look them up, because you might have some specific questions. But we're going to let the panelists lead some of our observations, and just to remind you, as Priscilla did, that if you have questions or comments, please feel free to engage with us directly on the chat box that you have open, the little attractive blue box. We'd be happy to integrate them into the questions for the panelists or for the research team. So we really dig in and create some so what's out of this research, and and confirm if these trends reflect what we understand about the sector or not. And it might turn into debate. It might be that we all go in the same direction. But let's see how that goes. So I introduced the panelists in the beginning of the call, and I think we have about 50 people now. So there's a couple more folks on the call. So just to catch you up, we have gone through the slides that you've received on the research and really focused on the key trends and key points of information. And we are now going to turn to our prestigious set of panelists, Patrice Schneider, Joanna Mayer, and Caroline Mason, to look from both practitioner and academic views, from fund foundation views, to see what is resonating with them, where they might have some specific points of feedback or questions, and we're going to dig in. Let's start a little bit big picture, because I'm really curious to see what our panelists thought. And if I open up the questions, and I'm actually going to turn to you first, Joanna, about the outlook and the potential of the VPSI sector. How did you react to the results of the study? Is there anything that jumped out at you particularly in the big picture that doesn't make sense, or that really is exactly what you're seeing in your research? Let's make sure that you're unmuted.
Thank you, Hedda. And let me first start to congratulate the EVPA team. This is really amazing that this survey really kind of showed how you earn this trusted confidence of the participants in the field of venture philanthropy. The response rate is remarkable, and as Peter mentioned in his initial remarks, the survey really provides a reality check. And let me jump in right there. Two trends that stand out for me as you know, corroborating this feeling that we are really moving towards more a mature stage of the field, but at the same time are also still in expansion mode. The first one, obviously, like if you look at where does the money come from, who are the players, one of one way to look at the findings is that corroborates this intuition that we see many more family offices now being engaged in venture philanthropy. I was particularly pleased to also see a trend that we see on a more global basis, but I was not sure to what extent it also resonated with the reality of the EVPA orbit, is the fact that institutional investors come in more prominently, and that is also the good news here is that we are kind of really making impact investing, venture philanthropy more mainstream, overcoming these kind of distinctions between social finance and impact investing. Distinctions become much more blurry. One trend that I see, or one potential that we have not untapped yet fully, and I'm convinced that it will happen in the next couple of years, is that DFIs, development finance organizations, coming in much more prominently. I'm sure the next survey will also show that. The second trend that I see corroborated in the data here is the move towards more professionalism. Three main markers here. One is the recycling of the capital that becomes much more prominent. The second is also people who populate venture philanthropy organizations, professionals within the organization. And the third one, obviously, that venture philanthropy impact investing provides this incredible space for professionals to come in at their pace. And we saw that in the pro bono professionals that become part. I would also like to raise just two kind of warnings, or basically raise some flags for things that we might want to be watch out for in the next couple of years. Two trends that came out also from the survey. One is related to the increase in cross-border transactions here in Europe. Very interesting trends, different, much too early to actually interpret the trend, but again, will be interesting to watch out to gather more data around that. The way I interpret it can be actually three different ways to interpret that. One is that the market for impact investing really consolidates within Europe, which is great news. The second interpretation would be that venture philanthropies actually become too cozy with their partners within the field and go and seek joint ventures with them, joint investments. And the third one would be that we are increasingly performing metrics that impact metrics, and that make us slightly more risk averse, which would go in line with a trend that we see less investment in Africa. So three different alternative interpretations that we might get our handle on if we kind of study this in a little bit more detail over the next couple of years, but really interesting. The second trend that I also found super interesting to watch out for is the increase in investment in intermediaries, and we have seen the mushrooming of organizations that consider themselves as intermediaries, also call themselves as social enterprises, and they have definitely an important role. But I would be worried if that crowds out the capital that's actually at the potential for the organizations who do things on the ground.
Wonderful. Thank you so much. That was I love the fact that you started with a moment of congratulating the research team, and also, you know, on not just the reality check and the data, but also the responsiveness. And thank you for the very insightful comments, Joanna. I think there's a lot to chew on there, and between the research itself that's come out and your comments, I don't think we have any shortage of discussion points. I am getting some questions in here, which I will try to keep up with here. There's the first one that I'm actually still checking with maybe the organizers if we can see if the slides are available offline somewhere that that the attendees can review in case there's something that they wanted to reflect back on. I am going to move to another panelist, and you know, we're talking about this professionalism in our space, which is an important and it's an important indicator that we're going in the right direction. And Patrice, I mean, who else, you know, represents professionalism like you? I want to know, do you have any feedback, first of all, about some of the points that Johanna made, or maybe speak specifically on this increase in professionalism and funding, if your organization has seen the same attributes that we capture in the survey. Could you address that?
Yes, can you hear me now, everyone?
We do. Hey, Patrice.
Good morning, everyone. It's a pleasure to talk to north of 20 people. I can only start by doing the same thing as Joanna and commend the team of research of the EVPA for doing this. Now, to answer Edda's question, can we go back to the continued growth of VP sector slides for everyone to look at, if I may? And your question being, you know, where has there been an increase in the funding? So just to place everyone, we are a 20-year-old non-NGO that has been investing in a social product called independent media. I won't go too much into that, but looking at the slide, we correspond to the third cluster, the 5 million euros to 10 million euros, where there's been the growth. So I'll start my point on that. First of all, our funding from inside that cluster has not been as great as 14 to 24. We've seen something much more on the stable level, but in resonance to what Joanna says, the sourcing of that funding is actually moving. So again, just to make it specific, again using Joanna's typology, we are an intermediary, we are a VPO. which receives funding, then passes it on to social enterprises, which are independent media in emerging democracies. So we've seen, as an intermediary in that cluster, we've seen a stabilization, but, as I started to say, a different typology, increasingly from foundations, first point, foundations that are, and that's for me a key message that seems to stem out of the research, foundations that are getting higher. There's more foundations that are getting on what I call the appetite for social investment curve, foundations that are now dipping their feet into not just in the sort of the polarization between either grants or making the endowment fructify. So there's more foundations that are getting on that appetite curve for trying investment for social purposes. So, and the second one is grants. I am seeing foundations that are saying, well, we don't want necessarily to dive into this, to the social investment logic, but we are ready to allocate grants for it. Concretely meaning that we were ready to put grants that are specifically aimed at strengthening either ourselves as an intermediary towards social investment or literally to the end recipient of that. So that's the first change of typology. The second one is DFIs. Joanna mentioned it. DFIs, I've always been in a way into it because of the microfinance and the energy interests of these types of actors. But I'm seeing the type of the type of themes that DFIs, they want to expand. In our case, independent media as a social investment slowly. But I'll put a caveat to that in stopping my comment, is that the DFIs, because of their legacy of working a lot with big projects that are implied by microfinance, energy, and so forth, or infrastructure, are not totally adapted to smaller niche themes. What do I mean by that? I find that the structures that they're typically used of doing are extremely well, not really complicated, but sophisticated because they deal with large amounts of money. Concretely, guarantees, for example, the usage of guarantees by DFI. They seem to be more ready or able to work with large sums using, for example, guarantees, but when it comes to lower amount, it makes probably less sense in terms of volume. If they want to use equity, typically they've been using equity for social purposes, again, at a large level, which implies different things. So the key message is that funding is stable, but we're seeing a different typology entering, which seems to be stemming from this very interesting survey. That's it, Adele.
Excellent. Thank you so much. Yeah, it's good. Good stuff. Thank you for giving us your perspective on it. You know, we're getting questions that are coming in from the audience, which I'm going to try to start weaving in a little bit. We also have some questions on methodology that I'm going to direct, Lisa, to you in a moment. But let me please pull out our third panelist on the vocal stage, Caroline. We're having some more kind of general comments about trends in terms of what we saw through the PowerPoint presentation, but also what you might want to add from your own perspective and how these trends reflect in your own organization in terms of increased funding, where it's coming from. Could you add some of your thoughts? Let's make sure that you get unmuted. On the left side of your chat panel, there's a green.
Yeah, thank you. Hi. Hello?
Oh, there we go. Hey.
Hi. Hello? Can you hear me? Hello?
We do.
Oh.
Perfectly.
So I thought this was a really important, actually, it was interesting, but I think it's incredibly well-timed, a survey, and really important because what we're seeing is, as you say, a real growth in the types of organizations that are beginning to think about different funding models, and that's partly out of need as free money sort of reduces and disappears, but also out of opportunity. So there's an opportunity there, there are opportunities for organizations to create trading models and revenue-based models. But I think what tied all this together was, you've got the growth in NGOs with no trading, the capacity building need, the value that the non-financial support provides, but unfortunately at the same time a reduction in unrestricted funding. And that for me was the worry point out of all of this, because actually what we're seeing is a greater need for unrestricted core funding, effectively social equity style funding. But on the more positive side, as Patrice was alluding to, I think we're seeing a much wider range of funding products out there for organizations. So we as an organization are really happy to look at grants. We're also happy to look at repayable grants. We're happy to look at a blend of grants and investment within an organization. We use guarantees. So we're also very happy to do just 100% investment. And I think what this shows is that the whole sector is sort of in transition. The use of impact as a fundraising tool, as an evidence-based tool, becoming as increasingly as your financial track record. So all this, for me, seems to be a market that's in transition. And so that says to me that the VP model is really, really, really important in this context, because it's not a binary model, because it's a model that understands and can cope with that transition. As I said, for me, the only red flag was this decrease in core funding, and how we might maybe be able to do something about that. And that's it.
Thank you so much, Caroline. I think we have. I think what we've been able to do now is to reflect on the results of the study and how you see them as specific organizations as practitioners. We started very high level when Joanna was able to give us kind of her overall view of the sector and how that correlates with what we see from the EVPA results, and then dig down a bit deeper into the practitioners with you and Patrice, showing us that how this actually manifests itself in your organizations. And I welcome again, we have 50 people on this call. Don't hesitate to log your questions or comments directly over the chat. We've received several here that I'm trying to filter in there, whether it's on the research, on the methodology, or for the panelists who've been sharing very openly and transparently what they see in their own organizations or in the research that they're doing. So let me turn to Lisa to help me with some of the questions that have come through from the audience regarding the countries that were covered here and country-specific highlights that have come through. So, and I'll even, while I have you on the line, just to make things simpler, I'm going to add a third question regarding, as we look at countries and regions and any trends there, what's happening or what's not happening in Eastern Europe. If you can tackle those three questions for me in one, I'd be delighted.
So thank you, Hedda, and also thank you to the panelists for all the insights. I think in terms of the questions that are specific to more methodology, we have tried to cover all European countries where we know that there are venture philanthropy or social investment organizations. And I'm saying where we know, because this is an emerging sector, and especially in some countries there are sort of new funds that have been set up recently that we might not yet know about. So we do use a snowball sampling in our survey, where we ask the survey respondents to recommend organizations that they know are not yet EVPA members. so that we can also target them. In terms of the specific countries, you could find that information in the survey report, but we do have some clusters there. We look at Benelux, we look at Eastern Europe, France, Germany, Italy, Scandinavia, Spain, Switzerland, Austria, UK and Ireland. So I think those would be the main countries or regions that we look at. I would say in terms of country trends, I've had this question from the very beginning, the first time we published the survey results, and my answer at that point was we had, I think, at that point 50 respondents, and it was very difficult then to have country trends, because you might then have, in one country, one respondent, and in some other countries we had more. So for example, in the UK, we would have quite a lot. But we don't really see the EVPA survey as being about specific countries, because we do think that there would be specific country reports that highlight what happens in that country, whereas we are really more about what's going on around Europe. And also then because we do have a confidentiality agreement with our respondents, so that when they provide data, we promise them that we will not publish data on their specific activities. And if you have then just one respondent in one country, and that is basically the trend, that everyone can really know that that's the particular respondent data. So that's why we don't publish that. In terms of Eastern Europe, we only have a very few respondents, and this is really because so far there's quite limited activity in terms of venture philanthropy and social investment in Eastern Europe. We hope that this will change, and we have also made a commitment in terms of EVPA in helping to build the market in Eastern Europe. So we have a dedicated person within EVPA who's focusing just on Eastern Europe. But yeah, that's really, I would say, I mean, if you look at the data, it's clear that that's where investment is lacking. And that's, I guess, the answer to that. I just wanted to make a few comments also on what the panelists have been saying, and I think I would echo the topic of professionalization of the sector. And when we started looking at this a few years ago, it was clear that you had people coming in from the finance sector, from social sectors, from NGOs, etc., and foundations, and coming together. And I do think we're seeing the emergence now of a new profession, of people that have been sort of educated and have received, have experience now working in the sector for quite some time. And we also have a dedicated training that we do at EVPA on venture philanthropy. So those are sort of signs. And I think in terms of cross-border funding, we see more of that, and I think that it's also important to work with the European Commission on enabling cross-border funding so that can work more and better. So I'll now hand over to Hedda again and see if there are more questions for the panelists.
Lisa, thank you so much. You managed to squeeze in 3 or 4 questions in one there that we got from the attendees. That was very feel satisfied with the response. If you have follow-ups, don't hesitate to log them. And Lisa, also thanks for taking a moment to react to the panelists, because I'm sure their insight is something as a head of research that you're very interested in. We could have a lot of separate discussions on this. But I'm going to take us over to one of those points in the survey that I know jumped out for me, and that we've debated a little bit within EVPA and have our thoughts on it, and see what Joanna has to say about it. And one of our attendees, Maria Amelie, she pointed out very very early on, she said, what is it with this increasing support to non-trading NGOs? Doesn't that contradict a little bit the movement of venture philanthropy into we're talking about professionalism and operating business models that are sustainable? It's not counterintuitive. And I know we've had several discussions about that, and I think we've got some interpretations from our side. But I'm going to turn to Johanna and say, I'm sure you noticed that jumped out at you too. Do you have any insight from what's going on in the VPSI sector in terms of this increase, or why that can be explained?
Thanks, Hedda. No, I found that finding truly interesting, and again, it just confirmed the fact that how important such a survey is, because it does provide a mirror. Now, it is obviously shooting from the hip from my side and commenting on this particular finding without having really the details on what type of organizations are these investees, right? Because over the last couple of years, we have seen a number of intermediaries coming to this place. They could be financial intermediaries, but they could also be the intermediaries such as Ashoka, Nest, and so on. So it's a little bit unfair to basically put all intermediaries under one umbrella. But I think it is a trend that we see over time. I wouldn't worry so much, because I think intermediaries do have an important role. I'm just a little bit concerned if we do not flag this now, or basically not necessarily problematize it, but in a way discuss it, what it means, or analyze it further, we might institutionalize that pattern, and therefore actually not live up to the expectation of what a venture philanthropy and impact investing is actually about, making organizations more effective, the organizations that actually are carrying out the product and service delivery and are in touch with the beneficiaries on the ground and so on. Now, did this come completely as a surprise to me? Not really, because as I just briefly alluded to in my comment, is that a lot of these intermediaries actually also label themselves as social entrepreneurs and enterprise, and there's nothing wrong with that, don't get me wrong. In research that I did already a couple of years ago with my colleague Julian Cardenas and Julie Batilana from Harvard, we systematically analyzed 200 organizations that self-label themselves as social enterprises. And also there, a large majority of the organization would be something that we call also, in a way, intermediaries. They engage in training and so on, rather than actually doing that in product delivery. I don't know whether that helps to kind of put a little bit more kind of insights around this interesting finding that might also help us to further unpack what it means.
I was just chatting with you there, but if I wanted to get your feedback on this issue as well. I mean, what have you seen that in your organization? This particular trend. Also, if I can re-stress something that we're getting from the attendees regarding this increased focus on the recycling of capital, could you please give us some of your perspective on this?
Absolutely. But before I go to recycling capital, I just want to highlight, just to step back into the sort of high-level lessons from the survey. The way I look at the survey, it's a fascinating sort of prism into who's coming in, really, into the space of VP in Europe. And yes, we can see the NGO non-trading coming in, but there's the one that I'm not seeing so well because of the way the survey is organized, is the financial institutions, banks, let's be clear. And what I'm trying to see is whether there's not a little bit of a polarization another form of panellization that is entering, meaning on one side NGOs that have no trading and are a grant-based model, both in terms of input and output, I mean what they receive and what they hand out. And then on the other side of the polarization, banks that will obviously slant things toward financial returns. And that's quite interesting to see that the NGO. So what I'm reading is basically grants-based organizations are actually entering into the space, which obviously is reflected. But also, I'd love to see the other side of the spectrum, which are financial institutions provide more financial returns. Because that's critical to have an overview highlight. First point. Second point, recycling capital. In our point, now I'm getting back more to the micro level, our experience as practitioners is that for us, recycling capital is in no way a counter to social returns. The idea is to use financial instruments toward a social impact. But in line with that, I listening to Caroline, she pointed briefly to something which has been always very big on my mind, which is also related to this polarization. Is the recoverable grants logic. So if it is true that both the grants logic is entering the space and then the closer to financial returns is coming in, it points to something I've always thought, which is what about so let's be very clear. Grants are minus 100. You give 100, you receive minus 100 back because it's a grant. If you look at the more financially centric organization, let's say 3%. In our case, it's 1 to 3%, or even higher in some cases. But what about the middle space? What about in recycling capital? I think there's an opportunity there to say concretely, organizations will come in and say, listen, we're going to have a sort of a social business logic into what we do, but these are risky projects. We will take 100 and we will recover, and whatever we recover, we'll get back. That offers two, in my view, opportunities. The first one is to force the sector to think, well, it's not just, it's a grant made to reach some form of financial sustainability. And the second advantage, so it really pushes the sector in the direction. And second, it offers either existing actor, whether the one that say we're only grants, to slide towards a more sort of financially sustainable model. And on the other side of the pole of the spectrum, probably financial institutions to say, listen, if you really want to have a social impact, you may have to slide back a little bit on that. So for us, so is there a polarization in the VP sector at the high level? And then at the micro level, is there an opportunity for what Caroline said, which is recoverable grants, to have new types of actor input? I hope this makes sense.
Makes lots of sense, Patrice. Thank you so much for giving your perspective. I'm gonna loop back to the EVPA team and let Lisa give us her interpretation on, for those of you that the question that we're looking at here is the particular trend we saw in the increase in funding for NGOs non-trade, which it sounds a bit counterintuitive, but I think both Joanna and Patrice have given us very interesting reflections on why that might be. And Lisa, why don't you share your thoughts on this topic as well before we wrap it up and go into financing instruments and more on the professionalization?
Yes, thank you, Hedda. And you were right that for us this was also a sort of counterintuitive result, also considering that we saw a trend towards recycling capital at the same time, more organizations wanting to invest in non-profit organizations without trading revenues. I think I can only agree with what Johanna and Patrice are saying, and I think particularly sometimes there's an issue of labeling. I would also say that, of course, non-trading non-profit organizations can have a lot of impact, and it's very important to support them. And you can make them more effective, of course, which is really what venture philanthropy organizations are trying to do. And I think there's another explanation also in that sometimes you can help a non-trading NGO actually develop trading activities. And this is also what venture philanthropy organizations often are trying to do in terms of their objective of creating financial sustainability within the investee organizations.
We're toggling between mute button. Thank you. I have not seen any further questions on this topic, so I do believe that we've addressed it, and I think we have all the reflections that we need to. We're already at noon, and we're going to try to wrap up in the next 20 minutes and see if we can pick some brains of our fantastic panelists before we get there. A couple more questions have come in from the attendees, but I want to bring us back to this theme that each one of our panelists and the research team has been pointing out regarding the professionalization and particularly what we've seen is this sophistication of the financing instruments that are increasing. That's a good, healthy sign that we're evolving in the right direction. So, Caroline, can I ask you to reflect and share with us, from your organization's point of view, how you've seen an evolution of the financing instruments and also the non-financial support? How have you seen this manifestation of the professionalization within your organization?
So I think what we're seeing is that the world as we know it is just not the same, and there are, I think we think about it as sort of permeable changing boundaries between what is trading and non-trading, what's profit and not profit. And so the approach that we are taking across all of these is that we're not trying to make a single product fit a particular model or a particular organization. We are restructuring ourselves as an organization to create a single funding team, which is both grant and social investment, and therefore, we think about things as tools in a toolbox. So we have grants, we have repayable grants, we have loans, we have guarantees, we have equity, and we look at what an organization needs over 3 to 5 years, and we create effectively a package over time that matches, that really helps an organization maximize the impact that it's trying to receive. So I suppose we're flipping the model around completely and saying, what does this organization need to survive, be sustainable, and generate as much impact as possible over the next 3 to 5 years, and what's the combination that we can use to do that, including non-financial support, because, again, coming back to that transition, the world has changed, it's very permeable, it's changing, organizations are transitioning, so alongside the funding and the money, what kind of support does that organization need through time? And that may change from, actually, we do quite a lot of support in terms of comms and marketing, because often NGOs have, who have not had a trading activity before, are actually very, very well run financially, but their ability to sell what they do, market and communicate is very poor. So we do quite a lot in that area, which is sort of different financial support. Governance, how do we build up their governance? How do we look at their, as well as their business planning? So we're really, at the moment, really looking very hard at our funding mechanisms and our funding processes to make sure that they are fit for purpose for what we think is going to be a really, really fluid environment going forwards. But we hold the impact at the very heart of everything that we do. And so these products, I suppose, these financial instruments, we see them as just different tools that we would mix and match to create maximum impact.
Thank you so much. That was excellent. Johanna, I wouldn't mind having you also giving us your thoughts on this particular trend. We're discussing the sophistication of financing instruments and non-financial support. Could you share some thoughts on that? And I'm also going to pick up a question from one of the audience members here regarding increase of impact investing related to mission-related investments by foundations in Europe. If you have some thoughts there, I'm just trying to sneak in a question here and there.
With pleasure. I follow the trend towards, the portfolio of instruments that we are using in the practice of venture philanthropy impact investing very closely, because it is, as also Lisa alluded to, it is also a marker to what extent we can already talk about a particular profession of the impact investor or venture philanthropist. And it's fascinating because I'm torn between feeling excited about new instruments coming in and the sophistication that we have reached. At the same time, I also wonder to what extent this might be a detriment if we look at this at more at the field level, because keep in mind that, as the field expanded, matured, different players came in, and we talked about this today, including also regulators. So in a way, we should not forget that we also have to co-educate the players that come into that, and regulators are clearly one important stakeholders in the field. And also on that front, I think what EVPA is doing, and also being involved in discussions in Brussels at the policy level, are super important. It's from a more researchy point, it's obviously interesting to see whether the profession will evolve much more in the more financial background way, or whether also the same level of sophistication, willingness to experiment will also happen more on, if you will, the social front. So I consider it as a work in progress, and as a social scientist, obviously the perfect setting for analysis to unfold as we speak.
Thank you so much. Thank you, Joanna. Thanks for also picking up these questions that we are getting from the audience. I really appreciate that our panelists and organizers are multitasking between chats from me and the audience, and expressing their reflections and thoughts. Very, very, very impressive multitasking by everybody involved. And I'm going to ask Lisa again, and I mean we're already at 12:10, and we were aiming for 12:20. I have a feeling we'll go a little bit over. And Patrice needs to leave us at 12:20, so I'll be looping back to him in a little bit on a question that's been on my mind. But Lisa, first, could you do me a favor? And given some of the questions that we've had from the audience, I'm not really sure if everybody that's on this call can see the questions coming in, but you have one about elaborating on the 70% of funding from corporations and the kind of trends that we have there. That's from Fabian. Hi, Fabian. Great to have you on the call. We have a few others there that on co-investment too. So why don't you take a shot at multitasking and squeezing them into one beautiful, succinct answer? The challenge of the day.
Okay, thank you, Hedda. So in terms of the corporates, it's already something that we saw in recent surveys that the funding from corporates was going up, and this is also why we decided to engage in a research project to see how corporates are developing their social impact strategies, and we're actually very close to publishing that research. I will not sort of go into the detail of that, but what we see is that corporates with their foundations often embrace the venture philanthropy approach because they see this as quite similar to sort of a business approach. So that's one way of channeling funding from corporates to the sector. Another way is by setting up specific funds that do corporate impact venturing. And often we also see that such corporate foundations or these specific funds are also co-investing with venture philanthropy organizations that have been around for a while, first to learn from them and also to sort of reduce transaction costs. So those are some of the trends that we're seeing. And in terms of co-investment, which was the other question, we have seen that there's a slight increase in co-investment. So in the survey report itself on page 47, there's a section on co-investment, and we asked the question about whether they had co-invested in the past, and 67% of the respondents said that they had co-invested in the past. 19% said that they do not co-invest in general, and 14% that they are interested but they haven't co-invested yet. And I would say that the 67%, we compare that to when we asked this question 2 years ago, and the share was 61%. So we do see a slight increase there in terms of more organizations co-investing.
Excellent. Thank you, Lisa. You managed to weave through quite a bit of those things, of those questions. That was my Skype trying to break in. I'm going to have to shut that one off. So let's loop back to some of the trends. And Patrice, it sounds like you can stay with us a little bit longer, and I'm really pleased about that. And questions are still rolling in a little bit on the audience chat here, and I'd encourage the organizers and the panelists, if you can actually engage with any of the audience members directly on chat and answer some of these questions there. I'm sure they'll appreciate it, particularly if we don't have time to get to them in the panel discussion here. Patrice, I'm going to turn to you anyway. I hope you're ready and your finger's right, hovering over your unmute button, because I want to discuss this trend. There's this increase in the percent of funds directed to specific project costs and restricted areas of expenditure from 25 to 29%. Yeah, and then there's a decrease in the funding going to cover overhead costs. Is that what you've seen in your organization? And tell us a little bit about the restricted funding.
Well, in our case, I have to use the, can you hear me? Hello? Hello? Can you hear me?
Hear you.
Hello?
Yes.
Okay, so in our case, I have to use the framework that Joanna said. We're basically an intermediary. We address ourselves towards social investment to fund ourselves, and then we in return fund social enterprises. And in terms of, so in this framework, we have never been very keen in getting restricted funding, in the sense that we basically, as a fund, try to take on funding that is not restricted to specific projects. We've had over 20 years the ability of steering people toward that. The second point is, as we as an intermediary deal with the VE funding space, we are because we are a recycling fund, we actually manage to pay our own operating costs, which is always part of unrestricted ourselves. That being said, because probably of the financial climate right now, which makes the recycling pump, if you allow me this metaphor, to be a bit stretched out, from our point of view, we are now changing that 20 years trend, trying to get a little bit more towards the unrestricted administration cost towards our organization, and it's actually getting some traction. But that's probably because of one of the trends I mentioned, is that as foundations that are up that sort of VP curve want to step in, but don't want to. They don't want necessarily to give us a loan, for example, a low-level loan, but they'll, because of actually very often governance issues, they're happy to give us a grant that actually makes this recycling pump function so that it's stretched over time because of the financial crisis. So we, of course, use unrestricted funds. We also use restricted funds for specific parallel projects to our investment process, but it's quite limited and quite punctual. So from our point of view, it seems to be it's new to us, so we're seeing a little bit of traction, but not a lot. On this specific point, I think there is a growing understanding I think that's the sense I got. That as Kathleen mentioned, I think there's a growing. I think there was always a need to make sure that unrestricted funds, and by that I mean the operating costs, the admin costs, that was always existing. I think in the first, I might argue that in the first 10 years of VP, that was taken off the table. I may be exaggerating, but from our point of view, clearly, as I said earlier. But now that's getting back on the table, and I think there's a very embryonic opening to this idea, and it's going to be tricky because if we, for 10 years, if some of us, some people, organizations like us said, well, we don't need it because the pump is working, we don't need it. Now we have to go back and say, listen, the financial crisis, the financial environment, rather, has actually asked us to review that. Will that have an impact on how funders see VP? So that's from our vantage point of view as a practitioner.
Excellent, Patrice. Thank you so much. So you know, it's such a juicy survey with all these like results and trends, and then we have all the reflections from the people on the call. It's almost a difficult decision to decide which track we should go on. Let me just for a housekeeping note, I referenced in the beginning of the call that I thought maybe the slides had already come out to you. Please let me correct that. They will be coming out to you this afternoon. So for those of you that are that have missed a couple of the slides or really want to dig in a bit later, you'll be receiving the slides as well as a recording of all of our dulcet tones a little bit later this afternoon. And again, this is not a closed opportunity to ask questions or make clarifications. Needless to say, we are more than happy to address questions, concerns, observations after this call. But very nice to catch everybody at the same time. As I am going to try to aim, we have to be finished by 12:30. I'm gonna turn again to a bit more of an open question because picking the brains, as I mentioned, of the panelists is one of our exceptional offerings of today. And I'm going to go back to Caroline, thinking about kind of a closing statement from your perspective on how you find, in terms of both the research and the comments you've heard from your co-panelists, because they might have made some reflections that are interesting for you. Do you have some closing comments or points for us to sit and chew on this afternoon that you want to leave us with?
Actually, I suppose I was really struck by Johanna's point about it being slightly torn about this, because I'm really quite torn about this too. And on the other hand, I think there are huge risks for the sector of being sort of slightly hijacked in the wrong direction, and almost being dragged into an old kind of economic model and financial model that clearly, you know, the past 30 years that hasn't worked particularly well. But on the other hand, we see such ingenuity and innovation in all sorts of different models, which is kind of breaking these models and creating really new models of the future. So, you know, that tension exists. But for me, that's why the venture philanthropy model in itself is so important, because it does blend so well that feeling that you can build something sustainable but with immense social impact at its heart. And so I'm kind of going on the side of the angels, really, and saying that this is a huge opportunity for venture philanthropy, for the underlying organizations that are trying to do these amazing things, and it's a fantastic way of helping them do that. And I think so the fact that this is growing is fantastic, but I do think we always have to be mindful of not getting sidetracked and slightly hijacked.
Very fair warning for us to keep in mind. We're on the right track, but it still is a slippery slope. And I think what I would like to also do, I mean, Joanna, we started with you in the beginning for your first reflections on the full industry with your broad set of experience across organizations and research units. It was great to hear you say that the EVPA research, first and foremost, it does corroborate what you already know about the space, but you were very impressed with the amount of replies, and that again, that this professionalization of the industry is something we need to stay on track on. Is there anything regarding something that the other panelists have said or questions that we've gotten from the audience? Would you like to leave us with a few thoughts? And we had a very wise warning from Caroline. Is there some last comments that you would like to leave us with?
Not really comments, but just reflections for myself that really kind of, again, corroborate the importance of EVPA. When I mentioned before, the outcome of the survey reflects or kind of resonates with some more anecdotal evidence that we have, then that it's different than it's just kind of repeats what other studies have said. No. It provides systematic and evidence for some of the intuition, some of the anecdotal evidence that we pick up from different places. And I wish the model that EVPA has provided in terms of providing a platform, a convening for joint learning would be replicated in other parts, because also as mentioned in the very beginning, yes, we do have studies and we do have especially commission studies, but typically those are with a particular intention in mind. And this is why this particular effort is so useful, because it really provides a mirror. And I think EVPA also has the potential to follow up on some of the reflections out of this mirror and make sure that we can stay on track. And the different, just the different initiatives that we have just heard today, for example, digging deeper into this finding that in Europe we do have more corporations getting engaged in it, and immediately follow up as EVPA and trying to unpack this further is so valuable for the field. So in that sense, I really kind of, again, can just congratulate EVPA on this leadership role in systematically kind of providing evidence, but then also not shy away from actually exposing some trends that might turn out to lead us in an unintended direction.
Excellent. Very, very positive final words from you, Jan, and it means a lot to hear that from you. I'm sure that the entire research team and the EVPA organization, we're very, very proud to have that echoed from you. Thank you for those comments. Patrice, looping back to you, do you have any last comments, reflections to share with us?
Well, if I had one, I would actually echo what Caroline said about the danger of hijacking. And very quickly, I spent a lot of time during my intervention speaking about the models behind, but I think the mission, what I failed to mention because of time, is that mission is the only thing we have done. The rest in terms of how we do it and so forth. So we learned two things today. First of all, is new types of actors coming in on both sides of the spectrum. NGOs, I still say the financial institutions. That will certainly play a big role. And the second thing is the sophistication of instruments. Mm-hmm. This sophistication of instruments, probably led by that part of the spectrum, offers the biggest chances of some form of hijacking. And I'll give an example. Very concrete example. Two examples. One is, as we as practitioners deal more and more with the financial institutions, we're also discovering not just the expectation of return, but the sophistication of the tools to seem to sidetrack us as an organization. It becomes, I mean, very concretely, it becomes so so sophisticated and complicated that we forget why we do it, and our job is to always remind them what's the outcome that we want, what the impact of this topic. First one. The second point is that to be very concrete, we are in conversation with one of these financial institutions who wants to get in for a substantial amount. That would probably change the nature of our niche of social investment. And I think, we are seriously considering whether there is an alignment to what we want to do. So, these are two data points that are very clear about what Calvin was saying about the things with hijack. That's what I take away as a final comment on this conversation.
Excellent. Thank you. Thank you so much, Patrice. So let's make sure we have the voice of our knowledge center. And Lisa, you've designed this survey, and you, Sheila, have managed to put together a very comprehensive and fascinating set of results that we've discussed today. And again, I'll remind the people that are still on the call that these slides will be coming out later this afternoon, and the recording as well. And if you are reflecting later on this afternoon and you say, wait a second, what is it that Patrice said about that, or what was the methodology used here, or there's a question that you didn't have a chance to ask, please don't hesitate to follow up with the EVPA team. But going back again, Lisa, you probably learned some interesting things from the feedback from our esteemed panelists today as well, and maybe you have a message for us. I'm sure included in that message is going to be, hey guys, everybody on this call, make sure you fill out the survey next time I send it to you, right? But there's some other comments you probably want to share with us. Please tell us.
Yes, thank you very much, Hedda. First of all, I think that Peter also mentioned this at the very beginning, that we're really counting on our community to give us the data, because we cannot invent, what we're showing you today. We're actually going through a lot of work connecting with our members, but also others to understand how they work. And so my thanks really. I would like to really thank the respondents, because I know that they have spent a lot of time providing the data, and then also, of course, our panelists today and Hedda for helping us making this a really lively discussion. I also wanted to mention something about our next steps, and in terms of the survey itself, we have decided that this year we're going to take a break because we have a lot of data to analyze still. And we think that it's really worthwhile to build this into a more solid database that also can be used externally. So that's really what we're trying to do this year. And we're also reflecting on some of the questions, thinking how can we do this better, so that next year's survey, so the survey that will be sent out in 2016, will be even better. I'd also like to mention that, as Johanna said, we also try to inspire our own research from the survey results. And what we've seen is that some of the puzzling results really connect to non-financial support, and we also think that there's a value in doing more on impact measurement. So first of all, we're already embarked on a new research project on non-financial support where we're trying to map, what are the different types of support, but also what is the cost of that support, and most importantly, I think, what is the value of the non-financial support to the final investees. So that's really what we're trying to do this year, and hopefully that will also, have an impact on the sector in the future, so that venture philanthropy organizations will have some guidelines on how to do this. So that's really what we have in mind for the coming year, and I would also like to encourage anyone who's listened to this webinar to get in touch with us if you have further questions. And of course, if you're interested in membership, also get in touch with us. And with that, I would like to finalize this webinar and maybe hand over to Hedda for a final word.
Just to say thank you again. I mean, I think we can't say that word enough to the EVPA team for the research, the panelists for sharing their thoughts, for all the attendees joining us today, questions, comments. I learned a lot. It was fascinating. I wish I could have been sitting live and with you, but this is the next best thing on a webinar. So again, thanks to everybody who's involved in both the research, from the people answering the survey to all the analysis. You guys are really wonderful, and I look forward to our next round, even if it's not this year. The output of the Knowledge Center is extremely beneficial to the space in general, and certainly to EVPA members. So wishing everybody a sunny, beautiful, happy day, and the rest of the week, or heck, why don't we just go for the whole year. Take care, and we'll speak to you soon again. Ciao, everybody.
Bye. Thank you.
Ciao.
Ciao.
Bye-bye.
Bye. Thank you.